Okay, the market's still down, as you can see, fractionally, 0.1 and 0.23 for the NASDAQ, 0.7 for the S&P, but we're up 0.8, up $4,600. Once again, we're outperforming. Our estimated income for the year is $95,000 in dividends. This is what I'm constantly preaching. I hope people are hearing this. So monthly dividends keep coming in from Cornerstone and the others. Okay, let's see what's going on in the portfolio today. The C's are up as usual because they're a 4-star fund. I wrote an article about that. You can see that on my channel, or I'll link it in the description below if I remember. Going down, let's see, we have Gof also up 0.5%, which we just wrote an article on. 5-star fund, 13% dividend. EDF, we just took profits in this, but it won't stop running up, 4%. We're up 45% in this, and this is a passive income name. This is getting to be a bit ridiculous. But it's a 15% dividend, so I don't want to sell and lose the income. Excuse me. So, what else is up? Yeah, we see green, but is there anything that's down that we can take advantage of with this overall market weakness? Not really. Everything that's down is down fractionally. So, Citigroup, I was going to take that profit. I'm glad I didn't. We're up 7% in that name. These are the names that we're down, and these are our shorts. So we should be down. That means if we're down on the shorts, our longs are having a good day. Sold a put on Shopify today. If y'all want to see that video, go back and check it out. Got $500 for doing nothing. $475 for just selling a put at 30 when the stock is at 45 and it's still dirt cheap there at those prices. So I don't like stocks in this channel, but I will sell options on them to generate more passive income. I don't want stocks if they don't have dividends. So this is our margin debt, 230. By the end of the year, that'll be cut in half because we're making 100 in income, and we've been just rinsing and repeating this system for years, and that's why we've grown to this level without getting any margin calls or anything like that, because there are many tools we use, maintenance, many tricks I employ, maintenance here at the funds to understand how much equity you can use in each fund. I have a video on that if you want to see that. So we're trying to be smart about our leverage. And so this is what we have. Is there anything else worth noting? Our performance and value. As you can see, we're beating the S&P by a handful. All right, so this is just a portfolio rundown. Nothing much to do today. We already sold that put on Shopify. That'll also increase our correlation to the NASDAQ and growth, which will just boost our performance even more when passive income is supposed to be generally a sideways movement. This helps boost our performance without taking up any debt. In fact, it paid down some of my debt. So this is the way to do it. This is the passive income way of life. And there's a reason why the account is up this much on a flat day. It's because things are getting more constructive in the market overall. Underneath the surface of the indexes, the S&P and the NASDAQ, there are tons of other equities and assets that are moving. All kinds of sectors, from the 10 sectors of finance, energy, tech, and so on, to different asset classes, bonds, business development loans, CLOs. They're all part of the market too, but you don't see them. And they're all moving, just like I showed you EDF earlier. And there's a reason why, and it's because we're above the 200 like I alluded to before. This is the 200-day moving average, and I've been pounding the table on this. Okay, these are the day's gains, all right? But the market, this is the S&P, is getting above that 200-day moving average, which is extremely positive. The portfolio is moving because all of these assets underneath are not necessarily the indexes, but their bonds and emerging market bonds and real estate, etc., pipelines. AMS as a pipeline, 10% dividend. Anyway, so this is how you outperform, and this is also why the portfolio is moving so much. It's because the market is getting constructive above that 200-day moving average.